Evening, everybody. It's 5:45, and this is your closing comment for Thursday, the 2nd of June, and it is video number 1306. And I remind you to hit that subscribe button. It costs you nothing, and the notification bell, and get all of the information that we put out day in and day out. Okay, so we started the morning with the ADP numbers coming in less than half of expected. The initial claims were 200, which was down 10,000, which is great. Um, Continuing claims 1,309,000, down from 1,343,000. All good. Later on, however, we got productivity. Productivity down 7.3%. That was a huge miss. And it is just short of the all time record for productivity. Unit labor costs up 12.6%. That is a monster of a number. And expectations were for up 11.6. So while we were expecting something high, we weren't expecting anything this high. That and then Microsoft coming out and lowering guidance started the market on the downside. Microsoft had closed at 272.40, and it opened 264 and traded down to 261.60, and then it turned around and rallied higher. We actually traded as high as 277. So 261.60 to 277.51, closed 274.11, up $1.69. Lululemon had earnings after the close. The stock had closed at 302.58, and that was up 12.62. The earnings were good. The stock traded as high as 321.40, so up an additional $19, and then settled back down to close at 307.50. That was up 6%, and still a very good day. CrowdStrike beat top and bottom line. Guidance was higher. The stock had closed 174.02, up 12.57, traded as high as 182, and then turned around 169. So a high 182 to 169 and a half close. So up $8.15, but down $4 from the close. RH, the old Restoration Hardware, they beat top and bottom line, and they gave somewhat negative next quarter guidance. The stock had closed at 301.94, up 11.94, traded as high as 332, and it closed 305.60. That was up 15.60, so a little bit stronger. But I have a warning about this, and this permeates the entire business. The reason with poor guidance, as you've seen in the last couple of weeks, poor guidance has been death. You saw what it did with Microsoft today. They lowered guidance, the stock goes from 272 to 261. $10 on that is still 4%, and 4% for a company the size of Microsoft is big. I will tell you now, from experience of 50 years in this market, people will start to sue these companies. I say that because the thing that turned this stock up after giving that poor guidance was the initiation of an additional $2 billion in buybacks. When people realize if this stock doesn't turn and move higher, let's remember Restoration Hardware came from this is a recent high. a year ago. A year ago, this stock was 700. The amount of stock that they bought back between 5 and 700 was large, and they spent a ton of money. If this stock, which just rallied off a low of 236, starts to come down and move lower, they will come out of the woodwork like termites to sue these companies. Another one that I think has a problem here is MicroStrategy. This is a former $1,300 stock who is heavily, and when I say heavily, I mean they borrowed billions of dollars to go into Bitcoin for their asset base. This is a software company. 1,300, closed today 248, the recent low 134. When I say recent, I'm talking about 3 weeks ago. So it's had a nice little bounce. Believe me, they will come out of the woodwork for these companies. Okay, as far as the markets today, we had a big reversal, a great one. Everybody that listens to me knows I've been ranting that this market was going to rally to between 42 and 4,300, even though it's a bear market, and that would be a bear market rally. Today's close is 41.76. So we are getting there. We'll have to see what the jobs numbers look like tomorrow. I have no idea what they're even expected to be. And frankly, I don't know whether good news is good news or bad news is good news. You don't really know. But the Dow today closed up 435 or 1.3%. The biggest gainer at up 2.7% was the Nasdaq, up 323.49. The S&P was up $75.50, 1.84. The Russell, which has been lagging behind a little for a couple of days, but has also run ahead a bit in this decline. By run ahead, I mean has outperformed and been down less. Up 42.85, 2.31, and the transports 295.52 or 2.8%. Advanced declines on both the NYSE and the Nasdaq were both 3-1 to the upside, and volume was 4.3 billion, which is light. It's lighter than yesterday, and yesterday was 20% lighter than the day before. And the VIX, which I mentioned last night, I found kind of interesting that both the markets and the VIX were both down. VIX was down again today, 97 cents. So it's still in that mid 20s range. The chart on the screen is the oil, and the reason that it's up there is because this is a weekly chart. And on that weekly chart, we have the closing high of 115.68 right here. If we were to close unchanged tomorrow, we would close above 116 and change, almost 117 where we closed today. That would be a new recovery high. And the thing that you have to remember when you're talking about commodities, because they are a zero-sum game, means every seller has a buyer, every buyer has a seller. There are no specialists. These are contracts for delivery. So anybody who is short this, anybody who sold it higher than this close is now wrong. And so a lot of times we get an acceleration out, like we did here, where we consolidated across for a month. And then when we did break out, even though we closed down that week, we gapped up the following week. We went from 95 to 130 in 7 days and then came back down. This has been a solid trader. This is an uptrend line. It looks like it's in the wrong place, but it's not, because it was drawn off the daily chart. But what you'll see is that it also parallels the 20-week moving average. and that has been very supportive consistently. We have a low, a higher low, consolidation across, breakout and consolidation above the breakout, and of course the parabolic move. I think that we're probably setting up for the same exact thing. Gold was higher by 2270. Dennis has a 1939, I believe, price objective in it, and he's usually deadly accurate. As you know, he's been a buyer every time it's been just below 1800, which I'll show you has been something that is pretty impressive. Um, he's up over 71%. He was up 71% yesterday, and I know he had a better day today, but every single time it's gotten down to this 1800, he has been a buyer, and every single time he has been solidly correct. His expectations on the upside here were about 1950. We got from 1950 back to the downside, came right back down to that 1800 again, and has turned up. 1800 to 1871, just so you have an understanding. It's $100 a point. So 71 points is $7,100 on that contract. Bitcoin was down a little today. The dollar turned back down again, which is, from my perspective, a pleasure to see because it really helps our multinational companies. But here's what we had. We had the run up, parabolic, came back down, tried to move up, came back down, tried to move up, and could not get back through. Oh, I'm sorry. This is the gold. I meant to hit the dollar. One sec. Okay, so I kept on saying that 104 was the area where the dollar rallies go to die, as you've seen here, here, and here. We went through it a little on the upside, and we stayed up there for a total of 2.5 days, and then we just collapsed back down to 103 and change. Tried to rally, couldn't get back through 104, collapsed again, sideways to lower, rallied back up, another lower high below this falling 20 day after the crossover of the 5 through the 20. That's the old Dick Donchian 5 and 20 rule. And bounced off the 50 day. So we look like we're turning up a little here, but the 20 day is rolling. If we break this low, which is 100 spot 30, I would look for it to, at the very least, test the 100 to 99 range. All right, everyone. Hope everyone had as good a day. Oh, A.A.I.I numbers. Big rally for and remember, this is a contrary indicator. Big rally in the bulls. Bulls went from 19.8 to 32. That's up 12.2%. And the bears went from 53 and change down to 37. Now, those are huge moves. I readily admit that. But I will tell you, bulls are still under their long term historic average, which is about 38. Bears is still above its long term average, which is about 30 and a half. And the I don't know, I don't have a clue group was 30.9 today, this week, up 4.2. And that's the only one that's right around its historic average, which is 31.5. So it's a very interesting contrary indicator. The move towards the upside in the bulls is somewhat of a negative, but I'm not concerned about it. I'm still looking for a top anyway. And just to give you another look, just so that we're all on the same page. Let's go to the S&P and I'll show you what my objective is. And this is why I'm not terribly concerned about this. I'm not terribly concerned because I expect that this range between right here, 41.96 and 43 is going to stop this market rally regardless. This is a bear market, and this is a bear market rally, and I believe that 42 and a half to 43, maybe 43.20, where this falling 100-day moving average comes through, might be the upper reach. But I think that these closes, 1, 2, 3, 4, 5, 6 closes in this area before breaking down again, is probably going to stop it anyway. All right, everyone. I'll be back first thing in the morning. Hope everyone made a few bucks today.